What is Bitcoin likely to do next on the short term, and is the bull run coming to an end? These are questions we're answering in detail in today's video. Let's dive in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at three particular charts: the short-term time frame, the total altcoin market cap, and the Bitcoin Brave New Coin Liquid Index, discussing a particular high time frame level of utmost significance. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us over on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us over on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Including access to our main VIP, you'll get access to our group chats, our general chat, trading chart and education chat, news, daily video, help, and trade setup chat. If you're interested in getting access to that with over 600 members, contact me in the pinned comment of the free channel by clicking my name here, or you can click these links for more information. Without further ado, let's dive in. So like we said just a few moments ago, we're going to be taking a look at the short term in massive detail, going over specifically what has been happening within the last 24 hours and where Bitcoin is likely to go next, the key levels you should be paying attention to, and how to plan and execute for what will occur next. We'll also be jumping over the total cryptocurrency market cap, specifically focusing on the altcoin market cap, discussing the altcoin parabolic phase and what we expect for altcoins moving into the coming months. And we're going to be talking about a very important level on the macro charts for Bitcoin, which we have seen historically act as a strong base of support for a continuation upwards, as well as an invalidation point for the bull run. So let's go ahead and get stuck into the data. 24-hour volume is down 7%, sitting at 147 billion. 24-hour liquidations are down 12%, sitting at 173 million. Of the 173 million in liquidations, 107 have come from long positions, and 66 million have come from short positions. Again, taking a very brief look at the price action in the last 24 hours, we saw a nice bounce from that lower area of support, which was marked by the initial low of the prior 7-day long uptrend. We told you in yesterday's video, this area here between 63,000 and 62,800 was an incredibly likely area for a bounce for Bitcoin, as it marked the initiation point of that 7-day long uptrend into the $67,000 resistance. We have seen a bounce from that point, and we told you again, if we were to see a bounce from that point, we would likely see a cross of the 50 EMA, resulting in a short-term uptrend developing. And that uptrend spanned at around 3.7%. The big question is, will Bitcoin continue upwards, or are we going to come back down and retest this zone? We'll come back and discuss that in the video today. Moving over to the broader markets, we can see the DXY is moving toward the downside. Again, we were expecting that, and we are still expecting a continued downward move to retest our yearly neckline of support, as well as our multi-month uptrending diagonal trend line. A loss of this area of confluence will result in an extended correction for DXY down to 103, and this would be bullish for cryptocurrency and for the stock market. If we do want to see the DXY continue upwards, we are going to need to reclaim and take out this 106.5 local high of this prior consolidation. Okay, this is 106.5 region. A break of that local high will result in a continuation on the short term to 107. However, this is the least likely scenario as of right now. Moving over to the broader markets, the S&P 500 has rebounded with some significant strength pushing not only back up from the 5,000 region, but breaking over 5,100, sitting at 5,118 as we speak. We were telling you for many, many weeks that a retracement to 5,000 was possible, and that if we did retest this zone, we were expecting this to act as a major reversal point and a major area of high time support, where we'd be expecting a macro continuation to develop from. We still stand by that. We are still expecting a macro continuation above that prior high to continue in the coming months. And this is all going to be valid provided the 5,000 area is able to hold on the weekly chart. If we fail to hold above 5,000 on the weekly chart, that will invalidate this move, and then we'll be expecting a correction down to our 2021 high at around 4,800. Moving over to the Dow Jones over here, exactly the same setup. It is lagging a little bit to the S&P 500, but overall it is exactly the same. A nice strong bounce from that 38 to 37.7 zone, our high time frame area of support. Provided we are able to remain above this level, we are expecting continuations upwards on the macro to reclaim and take out those prior local high points. If we close a weekly candle below the 37.7 area, we could see an extended correction to retest our 50 EMA on the weekly and our 2021 high point at 36.7 thousand. Keep your eyes on those charts. So without further ado, guys, we'll go ahead and jump into Bitcoin. A quick word from Bitget and BingX before we do. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump over to Bitcoin. So starting on our charts on the short term, we can see Bitcoin is still very much consolidating within this 2-month long horizontal consolidation. And we've talked many times about why this area is significant and the importance of our range highs and range lows. But in today's video, we are simply going to be focusing on this cluster of price action over here, discussing what we should be expecting next and what is happening. So at the moment, we can see Bitcoin is consolidating underneath our $67,000 region. Now, the $67,000 region is a major short-term resistance of Bitcoin. It marked our initial, again, lower high, an area of neutral resistance at that $67,000 region. The $67,000 area is a major area of resistance and a trigger point, meaning that if we're able to break above this level, we would then clear this area of resistance, which has lasted around 2 weeks, and we will likely see a continuation to retest the range high of our high time frame horizontal consolidation. That does mean while we remain underneath that level, there is still a chance we would see an extended correction to retest that 60K area. A break above 67 will invalidate the downward possibility and significantly increase the chances we would see a continuation to our range high and likely break and continuation through this 2-month consolidation. So let's go ahead now and zoom into the smaller time frame and really dive into what is happening. So in the last 24 hours, we have seen again a fair bit of sideways consolidation for Bitcoin. We discussed in our prior video, there were a few options that Bitcoin could have undergone within the last 24 hours. We discussed our uptrending diagonal trend line on RSI, and we told you there were 2 scenarios. Scenario number 1, that we would break above the 50 EMA, which is this red line, prior to breaking below the RSI, which will result in a continuation back to 67k. And scenario number 2 was we'd break below our RSI prior to breaking above the 50, which would result in a correction right into our major area of support, where we mentioned that we would expect a bounce from, a bullish reaction from. Scenario number 2 played out and we saw a drop into our area of support, which we then saw about a 3.7% rally to peak from that local low point. At the moment, we are now in a short-term uptrend, as we are sitting above that 50 EMA and the price is developing on the short term some higher lows. We are still expecting now the price to continue to the next level of resistance, as price generally bounces between resistance and support. If we do zoom out, we have support, we have resistance, we have support, we have resistance. So we are expecting a continuation toward that 67k level on the short term, provided our local low at 62.8 can hold. So to simplify what I said, the probabilities are in favor of a continuation to 60k, and the probabilities only invalidate the continuation to 67k of a loss of our local low at $62,727. So only as a loss below this level, a breakdown under that level, would invalidate the continuation to 67. That means no matter what happens on the short term, whether we see an extended correction back over here, or even if we see a drop back into this range, the probabilities are still in favor of a continuation to 67, and support is support until it is not. And until the bears show that they have significant strength, which would indicate, again, a break underneath this sell side liquidity, it is unlikely the price is going to drive much, much lower than this area of support, while we do have, again, buying pressure developing. So we are expecting a move to 67k, provided our sell side liquidity can hold. No matter if we see a short-term correction or we see a continuation upwards, the likely direction is still 67k. If we break below the sell side liquidity, that is when we are expecting a further correction. So let's now zoom out and talk about those two possibilities. So a further correction, where would that take us? If we were to see a breakdown of this level, like we mentioned just then, the next level of support we are looking at is going to be down at 60,700 to 60,000. This is going to be our range low. If we zoom out, this is going to be our range low of our high time frame consolidation range. Again, this would mark like the 6th retest of the bottom if that were to develop. Now, I think this is unlikely scenario, as again, we do have support over here. If we were to come back down into this range, there is a strong probability we see another liquidity grab into this deviation zone, potentially to retest our sell side liquidity, which has not been tested yet, sitting at $59,100. That would be worst case scenario. If we were to see, again, a break and continuation upwards like we are expecting, and a break over that $67,000 region, the next short-term targets are going to be 69,000. The reason we say 69,000 is because 69,000 is a high time frame area of resistance. This marks the 2021 high for the cryptocurrency and Bitcoin all-time high. And then we saw our next level of resistance zone sitting at 71.7 to 72.5, which is going to be the range high resistance of the current 2-month consolidation range. So those are the key levels. On the short term, to summarize it, expect a continuation upwards to 67. If 67 is retested, expect a continuation to 69 and to the range high resistance. We are expecting then a break of the range high resistance if retested, because the daily momentum has flipped positive. Okay, so the bearish case scenario only becomes valid if we lose our sell side liquidity, indicating that the buyers from this area of support have not been able to push the price upwards, and we have significant selling pressure, which could drive the price down to 60. If 60k is reached, expect a potential liquidity grab, potentially as low as our sell side liquidity at 59,000. So again, right now, it is not in this zone where we can say we're definitely going up, we're definitely going now. It is about planning and preparing for scenarios, identifying the likely direction, positioning yourself to capitalize on that, and being able to swap your biases when the probabilities shift against or into your favor, depending on your current positioning. So let's go ahead and jump over to our second chart. A lot of people are saying, well, I'm hearing a fair bit, Whale, is the bull run over? are we coming out of the bull run? Some people are saying yes, some people are saying no. And the obvious answer to this, or the most simple answer to this, is there are literally zero indications from an economic perspective, okay, when we look at, again, if we look at the economy versus financial markets, they behave differently. They are not the same thing, okay? And then we look at a technical perspective, we look at a historical perspective, and we can look at a structural perspective. Neither on any of those perspectives is there any indication that a top is in for Bitcoin. Okay, so let's go through all of these. Number one, from a structural perspective, if we were to see a top sit in, we would want to see an invalidation of historical data which were suggestive of the bull run initiating or continuing. So I'll give you an example. If we look at our first cycle, what we saw is when we broke above that dead cat bounce high, which is this level over here, we never dropped back below it. We actually broke above it on the monthly chart. This is weekly. If we look at the monthly chart, we never broke back below it on the monthly chart, and we continued upwards into a bull market. If we look at the next cycle, exactly the same thing. The dead cat bounce high, we broke above it on the monthly chart, and we never dropped back below it, continuing into the bull market. We look at our current cycle, we have broken above that level, we are sitting above that level, we have not dropped below it. So if we were to see a break underneath this level at 49,000, 48,000, that would be an invalidation of what we have seen in the past and a likely early top or invalidation of the current bull market. Until then, the bull market from a structural perspective is very much intact. Number two, if we look at the total cryptocurrency market cap, the total cryptocurrency market cap is still significantly bullish while it remains above that respective point. This is technically macro bullish, and this is technically in the bearish territory. A drop below this level sends us into a high time frame downtrend, which could spill over into Bitcoin, resulting in a macro downtrend developing and the bear market initiating or the bull market ending. And number two, while we do remain above this level, we are technically in this bull run phase or this macro bullish territory where a parabolic phase of Bitcoin could develop. Moving back over to our initial chart, we can see again from a technical perspective, we have no indication of a bear market initiating. Again, historically, what we have seen when the bear market starts, or should I say when we are in this phase of the bull run, which is now when we're retesting that prior all-time high, we have seen exactly the same things play out as we have seen before. What we can see on these two indicators is the market cipher A, okay, the pi cycle indicator in the Ichimoku cloud shows us that when we are retesting the prior high of the prior cycle, the lower band, the low long SMA, okay, of the pi cycle is breaking into the Ichimoku cloud. At the same time, the price action is retesting the high long moving average, sitting above the high short and the low short EMA, okay? We have that triple confirmation. So a break into the clouds, a rejection from the high long, and a continuation toward the high short and low short moving average. We have 3 points of confirmation. If we go back to prior cycles, we can see exactly the same thing. At the same time Bitcoin is retesting that prior high, we have got a rejection / retest of the upper band of the pi cycle indicator. The lower band of the pi cycle indicator is breaking into the Ichimoku cloud, and the price action is sitting above our mid bands of the pi cycle indicators. Exactly the same thing. 3 points of confirmation with structural significance. If we move over to our first cycle, exactly the same thing. The lower band is breaking into the Ichimoku cloud. The price action is rejecting from the upper band of the pi cycle, but sitting above the mid bands. Again, 3 points of confirmation. So we're looking at historical data from a structural perspective and now a technical perspective. In fact, everything that we have seen in the past is playing out perfectly again. And there are no indications from these two perspectives that a potential top is in as of now. Now, if we zoom that out to a macroeconomic perspective, we have to understand that price action doesn't determine where the price will go next. We have to understand that buyers and sellers determine where the price goes based on their decisions to buy and sell. So we wanted to find out where the price is likely to go next. We better analyze, well, what is pushing buyers and sellers to make their decisions over a course of a macro scale to buy and sell. And one of the main drivers behind the market risk, perceived systematic risk, perceived being perception of risk in a future period, that's what perceived systematic risk is. Systematic being risk factors that are uncontrollable uncontrollable by investors, such as interest rates, we can take a look and say, well, as long as we have a general trajectory towards falling or reducing interest rates in a later period, the perceived systematic risk in the market is going to continue to decrease or remain low enough that facilitates a macro continuation upwards and drives investors' decisions to front run a potential low risk environment in a future period as the market is future seeing. So we have to understand, again, we're not just looking at charts, we have to understand what will make buyers and sellers decide to automatically just start macro selling. What will make them decide to continue macro buying? We have to look at drivers of price action. Other drivers include social perspective. So ETFs coming up, the Hong Kong ETF, that might be a big one. Okay, so social perspective is a big one. Taxation policy, governmental policies, restrictions and regulation, those are all big ones. Okay, like we've said already, interest rates, a absolutely massive one. And then sector exclusive news is also a very big one on the short term. So looking at things like the Binance issue with CZ or the lawsuits, all that kind of stuff. All these things can play an impact on investors' decisions to buy and sell on the short term. But again, zooming out, the most important one is going to be, is the perceived systematic risk falling or rising? Is the risk in a later period perceived to be lower, or is it perceived to be higher? And if it's perceived to be lower, it is logical that risk asset markets are going to continue to travel upwards in accordance to their future seeing qualities, okay, characteristics. So as long as we have, again, the interest rate narrative continuing in the current trajectory, which is interest rates are going to continue toward the downside, we are likely to see asset prices rise over a period of time. So if we look at, say, is the top in from an economic perspective, it is not. Okay, from a structural perspective, it is not. From a historical perspective, in terms of historical price action, it is not. And from a technical perspective, it is not. There are literally no indications of the top. The only indication we potentially have is that we have seen the price action now push sideways for 2 and a bit months as a result of sideways price action after a large explosion in price action, so a 60% rally, and then we have immediate sideways price action. We see relative momentum and volatility, okay? Because this is relative in comparison to that prior region of explosion in price action. We see relative in momentum and volatility significantly decrease. Now that decrease in momentum is not a consequence of weakness. It is not expressive of weakness. It is telling us in this period, in comparison to this period, we have seen less volatility, and therefore volatility appears to be decreasing, when in reality it is actually not what it seems. So a lot of people take that and they think that is bearish and they think exhaustion, therefore we are correcting, but we actually have absorption. This is actually a bullish structure. Anyway, thanks for watching, guys. Have a fantastic day. Catch you guys in the next one on Monday. See you then.